We are back with some new economic data.
Yeah, so inflation rose by 0.2% in October. That's month to month. And then 2.6% year over year. That was in line with expectations. Here to help us digest these numbers, NBC News business and data correspondent Brian Cheung and our senior business correspondent Christine Romans. Good morning to both of you.
Yeah, Christine, let's start with you. Give us a rundown of these numbers and just your reaction.
It shows you that inflation picked up a little bit from September to October. After months and months and months of inflation cooling, this is inflation heating up a little bit. Now, 1 month is not something to be alarmed over, but it does show you that this is a reversal of the trend that we've been seeing. And you dig inside these numbers, and still housing is a big piece of this. Food prices rose a little bit. Gas prices basically steady. But something to really watch here, because the Fed's been cutting interest rates, right? Because it thought it had inflation under control. This is a reminder that the job isn't done quite yet.
Yeah, and Christine, with the holiday season nearly upon us, or according to some, upon us, what does this all mean for the cost of just those essential items heading into this busy shopping time?
I mean, prices are still higher, right? There are inflation rates. That's something that, economists and journalists talk about. But then there are price levels, and price levels are still higher than they were 4 years ago. You look at eggs, you look at gas prices are 60% higher today than they were 4 years ago. Housing is higher. Eggs are higher. Grocery prices are higher. So this is really what drove people at the election, right? The idea that they want 2019 price tags and we have 2024 price tags. And even with inflation cooling overall, those prices are higher than they were before the pandemic.
So, Christine, in some ways, I guess it remains to be seen what it means for our wallets when it comes to, does this impact any of the next interest rate cuts? But if you're managing these credit card bills, mortgages, what's this mean?
I think the bottom line here is that 6 months ago, we would have thought that interest rates would be coming down much, much faster. And that hasn't been happening. It's been very slow and cautious. And this is another reason why the Fed can be slow and cautious about cutting those key mortgage interest rates. And of course, that means that your credit card, borrowing costs, your car borrowing costs, your home loan borrowing costs, those are going to stay a little bit elevated here.
All right. Speaking of cutting, Christine, we are cutting you free. Brian, let's bring you in here from the big board. Walk us through just how these numbers do actually compare with previous months.
Yeah, well, look, as Christine was just talking about, yes, that number on a yearly basis is a tick up, a bit of a reversal. So the last read that we got of year over year inflation, again, how much did prices rise over the 12-month period, rose to 2.6% in the month of October. So that's a little bit up from the 2.4% we had seen in the month of September. When we break it down by category, you can see right here, these are now the monthly changes that we're looking at here, right? So this is from the August to September period. If we look at food over September to October, prices increased again by 0.2%. Energy prices, though, and this was good news, basically went flat between September and October, largely due to declines in gasoline prices at the pump. But this is the big concerning one that we're going to have to watch is shelter costs. This is the biggest one for most Americans. Mortgage payments, rental payments, that went up by 0.4% in the month of October. Again, that's a really big cost for Americans. That's the one that we're going to have to watch.
Brian, also, we've got one more Federal Reserve meeting this year. Christine touched on this. It's mid-December. We know the Fed cut interest rates last week. But what is an expectation that this inflation report, the impact it could have there? What are we expecting?
Yeah, well, if you rewind to just kind of that chart that I showed you, again, it ticked up to 2.6%. The Federal Reserve really wants to target inflation around here. This is 2%. So you can see we've been kind of coming down, certainly from the peak of around 9% inflation in the summer of 2022, which isn't on this chart. But basically, since essentially the summer of last year, we've kind of been going sideways here. So, yeah, people have described this as the last mile of inflation, maybe call it the last 2 or 3 miles of inflation. But the Fed, because they still see inflation above target, they want to keep interest rates relatively high, although they say with concerns about potentially unemployment rising, they want to alleviate some of the pressures on those borrowing costs. That's the reason why they're expected to likely cut interest rates into perhaps the end of this year and even the beginning of next year. But again, they don't want to cut by too much because they don't want inflation to accelerate from here.
And that's the question, Brian. If interest rates are going down and inflation is still not going down as much, is there anything else out there that we expect would lower inflation?
Yeah, well, I mean, which, by the way, the Federal Reserve is cutting interest rates, but they are still relatively elevated over a historical period. So that's the reason why they still believe they can cut interest rates while still doing the job of taking inflation down. But again, where is that sweet spot right in the middle? That's a real tightrope for the Federal Reserve that they're going to have to try to figure out based on the data, not just the inflation report, but the jobs report, which we'll get another read on in about 2 to 3 weeks.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.